Hey everybody, it's Tradiest Trades here with another Commitment to Traders breakdown. Every single week, you know that I hit you up with a nice overview of a market that's set up using the Commitment to Traders strategy. The CFTC lays the code bare every single week, and this week is the same as any other week. There's lots of good setups here, and today we're going to take a look at a different setup. We're going to take a look at cocoa, and I'm going to show you why I'm looking to long this market on a confirmed trend change. A couple things to get out of the way. This is not investment advice. I'm not telling you to trade these things in any way. That's your own responsibility. There's real risk involved with trading. I'd like to also acknowledge Larry Williams, the legend. These concepts are he originated this work. I'm not pretending that I came up with any of this. These are the concepts that I used to successfully speculate in the market, and I'd like to give credit where credit is due. So let's dive into why I'm looking to long this market based on the fundamental underlying conditions that drive the market here. So taking a look, where we always start is the Commitment to Traders Commercial Index, the red line here. We see the commercials are at an extreme and long positioning. Anywhere above this line here, this green line, green and red line, shows us that the commercials are extremely long relative to the last 26 weeks of positioning. So that's bullish code number one. We can also look here and see the green line, the investment advisors. Their sentiment last week was extremely bearish. Now it came up a bit this week, but overall this sort of signal has a hangover effect. So we see whenever these advisors get to extremes, especially when they're at juxtaposition with the commercials positioning, we need to pay attention because that could be a sign of a very significant move in the opposite direction coming. Now what we see here is the blue line, which is very typical. They're at the opposite end of what the commercials are doing. So we see that the large speculators are at an extreme in short positioning. And when these guys get to an extreme in their position, we're typically close to the change in a trend at some point in time, once we get a confirmed trend change on the daily time frame. So then taking a look over here at open interest, we can see here the black line is open interest. Now what I noticed first of all is that open interest is extremely low. So generally speaking, low levels of open interest are associated with market bottoms. What open interest is kind of exactly how it sounds. How much interest is there in the market? How is the public or the large speculators or are the commercials interested in this market? What we see here is that we've been coming down. There's been no interest in cocoa. It's just been going way down at basically a 3+ year low in open interest. And we see while the open interest has been declining, while the general public and the large speculators have become basically indifferent to this market, not paying attention to it, what we see here is that the commercials are actually quite heavily buying this market. So we see here the commercials they're not quite at a year plus extreme, but they're getting pretty close. So if I was to draw a line from here to here, that's going to show a year's worth of positioning. What we can see here is that the commercials are very close to a year plus max extreme in their long positioning. So that's bullish. They're not quite there. I think they're a little bit below this low, but look what happened the last time they got this long. That was a nice multi-week up move. Could have made quite a bit of money trading cocoa on the long side based just on that. So we see that that's another bullish code. We've seen sentiment. Now we can also take a look at valuation. So how is cocoa in its pricing relative to other benchmarks? So we see right here the brown line, this is the bonds, the treasuries. So we see the cocoa is undervalued relative to treasuries and very close to being undervalued relative to the price of gold. Not quite there on the US dollar, which is the green line. So that is a bullish code as well. So we also see the stochastic getting quite close to being oversold. That's not a primary indicator, but it's just a supplementary indicator. Now we also have seasonals in our favor here. So let's take a look at the true seasonal here. So going back over to this platform, we see right here, this is the blue line. True seasonal is for cocoa to rally from February 14th up until April. So we have true seasonal in support of a rally at this time of the year. We also see the price action is in alignment with the true seasonal. So what I mean by that is typically cocoa is making higher lows from September up until this January, February timeframe. So we see that we've got the price is in alignment with this seasonal. What is also very interesting is this is a very nice trade because it's in alignment with the dominant underlying 52 period upsloping moving average. So in other words, we're in alignment with the trend. Also, another thing to look at is the last time we got a bullish reading right here from the commercials was back here. Now, what we need to kind of pay attention to is the relationship of this positioning and price. So the commercials are as long as they were back here, but where's price? That's where you need to kind of pay attention. We're actually higher. So the commercials were really bullish on cocoa back here at lower prices. They're the same level of bullishness again, except we're way higher in price. That to me is a really important point that tells me that this market is fundamentally set up for a bullish move if we get a trend change on the daily. Something else worth looking at is a cycle. So this is a dominant 130-day cycle. I used daily data. I looked back around 850 bars to come up with this cycle. And what we see here is that cocoa is in a cyclical low period, a cyclical low heading up until around May. So that's nicely in alignment with the true seasonal going up until April. So we have cycles in our corner as well. There are some higher time frame cycles that point to major cyclical tops right now. Like there's a 57-month cycle that's topping that goes down till around 2026, 2027. I'll show you that. End of 2026. So we are in a cyclical topping zone on a really high time frame cycle, but this can translate to the right. So that could come over here somewhere and then start coming down. So based on the positioning and everything, I just find it interesting that this cycle is in alignment with what we're seeing from the positioning of the smart people, the commercials. Another thing that's interesting is we have a front month premium market. So what I mean by that is over here on barchart.com, we can see the front month right now is the May contract. And what I want you to pay attention to is the pricing structure of these contracts. So you see May contract is selling for $10,325. Next month out, 10,121. 98, 91, 84, 81, 79, 77, 74. What do you notice about that price structure? It's getting cheaper the further out in the future this product is getting delivered. So what that implies is that somebody really wants delivery now. They're willing to bid the current month, which is the front month anyways, the May contract, up to a premium. Typically what we see is what's called a carrying charge market. So the further out you go in the future, the pricing goes higher. And the typical retail trader will think that looks bullish because it's more money out in the future, but that's not what we're seeing in that scenario. It's carrying charge. The person that's holding on to the cocoa and agreeing to deliver it in March has to store it. They have to insure it. They have to protect it. They have to also protect themselves against the fear of the great unknown. No one knows what's coming. So there's they get paid to carry it into the future. This is unique. What we have right here is a premium front month premium market. So this is basically what we see here is we have the makings for a commercially driven bull move in cocoa coming up. And these moves tend to be very aggressive. So that's another very bullish code that we're seeing here in cocoa this week. We also see some signs of accumulation coming into the market. I'm going to just switch on over here onto the daily chart. We're going to take a look at the ProGo indicator, which is a measure of accumulation and distribution. So I'm going to just minimize some things. This is the ProGo indicator. So what we see here is there is some accumulation coming into the market. So the orange line is the professionals. The blue line is the retail, the general public. Now what we're looking for is a divergence between what the orange line is doing and what price is doing. So we see here that the price made lower lows while the ProGo made higher lows. So what that tells me is that this market is being accumulated by professionals. The commercials are buying this market pretty strongly. And we also have another measure of accumulation showing us, if I go over here onto the insider accumulation index, which is this green line here, we see the price is making lower lows, and it's the ultimate oscillator is what I was meaning to show you, is this blue line down here. We have price making lower lows while the ultimate oscillator is making a higher low. So that is divergence. That'll confirm if we can close above this trend line, or ultimately if we close above this high. The highest high made on the oscillator during this divergence would definitely trigger that oscillator divergence. So basically we have measures of accumulation coming into the market. There is also bullish divergence on the momentum indicator on which time frame here? On the weekly, yeah. So we see here price making lower lows while the momentum indicator here making a higher low. So if this momentum indicator can turn up and close above the high there, that would be a very strong sign again for cocoa. So we've got a lot of things going for us. We've got the commercials at an extreme in positioning. We've got the the sentiment from the advisors being very, very extreme in terms of bearishness, which is a good contrarian signal. We've got open interest at a 3+ year low. Generally, open interest, low levels of open interest is associated with market bottoms. We also see undervaluation versus gold and the treasuries. We have true seasonal up until around April. We have a premium market, which is a commercially driven bull market condition. We have a 130-day cycle pointing up until May, and we got signs of accumulation. So what I just summarized to you is there's a whole lot of different things that are fundamentally underpinning this market that suggest this market should have a move of some significance to the upside. We don't know exactly how significant it will be. That's impossible to predict. What we do know is that the fundamentals, the conditions under the marketplace are telling us that longs will be good trades if we can get a trend change. And that's the key. So this isn't an invitation to just blindly long cocoa. We need some sort of trend change. So that'd be a 12 Donchian trend change, a qualified trend line, 18-period moving average entry, volatility stop, different entry methods to get you into the trade, or at least to confirm the trend has changed. And then once you know the trend has changed, you can ride that momentum with bullish entry triggers should give you more high probability setups because the fundamentals are aligning with the direction you're trading. So if you like Commitment to Traders, if you like what you just heard, or if you want to learn more about how I broke down this market and how I trade using the Commitment to Traders strategy, you can shoot me an email at tradiustrades@gmail.com. I will send you an invite link to my private Discord where I share all of my weekly setups and how I'm analyzing the market here using Commitment to Traders. Don't trade blindly, everybody. This sort of data is available for everybody for free. You just need to know where to look and what to look for, and you can give yourself a huge advantage over the rest of the market by dialing in and really learning how to figure this stuff out. And I'm happy to help you get there. I hope you guys have a great rest of your week, and I really appreciate you taking time to listen. Bye-bye.